This is episode 117 of the Steady Trade podcast with your host, compassionate handyman Tim Bohen.
Whether it be lifting weights, cutting wood, doing handyman type stuff, punching you in the face, I tend to break these things.
And level 6 dark wizard Steven Johnson.
I feel like saying welcome, brothers and sisters and children of the night.
Today, the guys take a look at recent hot moving stocks and share their thoughts about the money behind these moves.
If you think you got a lot of money with $1 million, remember, there's like Saudi sheiks with like $1 trillion, okay? Back in the day with penny stocks, it was all just small and medium accounts. When you think there's rich, there's a whole nother level of rich out there.
Who may be sitting across from you at the trading table.
And that's why I'm always thinking, like, what are the institutions probably trying to do here? Are trying to prop this up, and if they're all propping it up, is it because they're going to try and squeeze it tomorrow?
And many more factors to consider. And of course, they talk about why it's really good to learn how to play this game.
But if you can be patient and wait around for these, the beauty of these things is you don't need huge size, man. Listen, if you got a small account, you got 100 shares of FRAN and you make $5 a share, you're pretty happy.
I bought 200 shares of FRAN and I was up over $1,000.
Even if it drops, his cover was G's.
It's another great episode of Steady Trade. Right, Steven?
Welcome to the Steady Trade podcast, in which we will be discussing some live trading. We'll be discussing my fabulous cover YUMA and why you should anticipate danger. And we'll also be giving you a walkthrough of FRAN, as it has been the hottest runner of the last week. And we'll give our trades on it and why we took the trades and why we didn't take other trades. All that and more on this week's episode of the Steady Trade podcast.
Hey everyone, Tim Bohen here. Really appreciate you listening to the Steady Trade podcast. I have a great time doing it, really giving back, and it's a true passion project of mine. But if you really want to get into the nitty-gritty of trading, in StocksToTrade Pro, it's a mentorship program that I do twice daily webinars every single day of the week. Never miss a day. Market open, market close. And I think it is the best way to really speed up that learning curve. And the best thing about it, and this is something that I'm truly, truly proud about, is we built an amazing community in StocksToTrade Pro. We have a chat room, traders in there all day long, new, intermediate, advanced, young, old. It is an amazing community, and I think by working in these twice daily webinars with the chat room, with the community, with StocksToTrade, it is one of the best ways to become that consistently profitable trader.
Welcome. I don't want to say welcome back to the Steady Trade podcast because I feel like people have returned so many times now that it's almost like you're not coming back. It's like you never really left. It's like family now. You know what I mean? I feel like saying welcome, brothers and sisters and children of the night.
I do like that, actually. I like where you're going with this.
Welcome, children of the night.
But it is a welcome back to you, Steven. You've been a little under the weather the last couple of weeks. So if you're a listener to the Steady Trade podcast, you might have noticed a little bit of spotty appearances by Steven, and that's because he contracted dengue fever on one of his many trips to Thailand. And but I'm glad to see you're looking better, feeling better. You still forgot to comb your hair, but that's fine. At least you're not wearing a tank top. I'm just glad you're not. You've got over that at least.
No, I stopped wearing tank tops. And the other thing that I started doing, I had the flu for a week, which has been a disaster, more like 9 days. But one of the cool things, I got this Apple Watch. I bought it for my birthday, and I thought at first it was crap, but I just, when you're like, yeah, I'm really grateful for the present. But these watches, the way they track all of your stuff and then connect to like MyFitnessPal on your iPhone, and then you track what you're eating and what you're not eating, and make sure that you're within a deficit based on your heart monitor. Shit's getting serious with being healthy.
It's funny. I keep wanting an Apple Watch, not to get too off topic, but I've been a Fitbit user for 10 years, and my issue is I just destroy the things all the time. I've gone through.
You go through, like, you do too many calories, you burn too many calories, and
whether it be lifting weights, cutting wood, doing handyman type stuff, punching you in the face, I tend to break these things. So I've always been avoiding, the $400 Apple Watch, because at least a Fitbit's only like $80. So when I break them, it hurts less. So
yeah, but
considering you've got soft hands, you moisturize, you haven't had a callus in your entire life. I'm sure that Apple Watch will last you until for decades.
I'm a full blown boxer. Did I tell you that?
At least when you fall down, drunk and you hit the ground, it's face first, and the Apple Watch is probably safe at least. So
I know I'm pretty good at drinking these days. In respect of not drinking, I've only drunk once in the last 8 days. It's mental.
But you were
a regular user.
near death with the flu. So
like I knew it was funny. Like I knew that I started getting better from the flu when I started wanting to have a pint of beer again. I was like, I think I'm getting better. I feel like I want to have a pint. So that was my barometer. But anyway, now the Apple Watches are good, and apparently I've seen people boxing on them, so you should be able to chop wood if that's your thing.
Well, and it's just I'm just afraid of smashing it is all, because I've smashed many Fitbits. So,
but you're too much of a cautious man. So for a man that is making the money in the stock market, he's got his own nice little house. He sold his business. What's a $400 Apple Watch to you? You savage barbell.
I'm just cheap. That's all there is to it. So.
No, but it's true though. It's like no matter how much money you have, because obviously I'm in Dubai as well, and you get paid okay here as well. Doesn't matter, and I'm not saying I'm rich, but no matter how much money you have, you can't change. Like I can't buy any designer stuff that's too expensive. I don't want to go to a nice restaurant. I don't want to spend too much on a meal. And it's like, well, what's the money there for?
Stephen, here, 2 years in, I think we just found something in common. So
I know, no, but seriously, that is the only thing we've got in common. We're both not broke.
Pretty much, yeah.
We don't want to spend the money that we've got. It goes against values and principles. Do you know what I mean? It's like I don't need to spend this money. I'd rather give it to a homeless child with no shoes or feet or toes. Anyway, we're going to talk about FRAN. It's like the girlfriend I never had. FRAN. It let me just bring it up. It just ran. And actually, before you get started, so if you're listening on iTunes, I am we're gonna do some screen shares here. I'm actually gonna share and unshare my screen from time to time. But like always, if you're listening on iTunes, I just kind of want to set it up so that you can follow along. The ticker is FRAN, excuse me, and we're going to be talking about the week of basically this first spiked up on September 10th, 2019. Today we're recording on September 16th. So if you're going to bring up your chart to follow along at work while you're listening to the podcast instead of doing your work, bring up FRAN from 9:10 to 9:16. But go and I'm sharing my screen, Stephen, so you can just kind of direct me how you see fit. So. Yeah, no, it's cool, and I'm a big advocate of not doing what you're employed to do during working hours. and I tend to do that now and then, but like no one. I think as long as you get your work done and you come in half an hour earlier, you stay back half an hour late or whatever, I don't really think it's a problem. Do you know what I mean? I think it's okay.
Yeah, I think, again, if first of all, if you make yourself valuable, if you're a good employee, I mean, remember, I had employees.
Got at your job, you know what I mean?
Yeah, and if you're good at what you do, if you care, I mean, now I never had an employee ask me, hey, can I spend some time day trading during the day? But if you were a good employee, you worked hard, you cared about your job, you showed up on time, you cared about the customer. If I walked by and you were screwing around on Facebook, I didn't say anything. It's like, I know this guy takes care of business. Now, if you're worthless, if you show up late all the time, if you're not, busting your ass when it matters, that's a different scenario. But anyway, so.
No, great. It's like a reciprocal relationship. It's like, I'll be there and I'll be dependable. So you know that when you need me, I'll be there. But in return, can I just have this 20 minutes when it's quiet? You know what I mean? Or can I make time?
Yep.
So it's just a mature relationship. But anyway, FRAN, I was sick. I was off work. And when this hit front side of the move, and I was feeling down in the dumps. And I just thought, you know what it is? This stock is worthless. And that was on this initial spike on the 10th.
So
Pre-market.
in pre-market, I'll kind of give you the read a little bit. So in pre-market, this was technically this was an earnings winner, and I know that's one of the most confusing terms in day trading, but we talk about it a lot. We won't define what an earnings winner is, but the simplest shortest description is it's a stock that's up huge on earnings. Doesn't really matter what the earnings are. This stock had gone from 5 to 9 in pre-market. So basically was up 100% on earnings in pre-market.
And this thing is a super low float, right? It's like 1 million float.
Yeah, but I think just over 1 million shares in the float. Yep.
Yeah. So the company, I read an interesting article on Yahoo actually at work because I was just wondering what was going to go on with it. And they were saying it's a good indication of how far up a stock's going to go based on how much insider buying there's been beforehand, before the stock goes up. Because if a company knows it's going to have a good third quarter or fourth quarter,
sure,
it knows it's going to release an innovative product. There's nothing illegal about them investing in the company that they work for.
Well, and that's what you want to see. FRAN. We're going to talk about FRAN a lot. This would be what we call a day trade, or maybe an overnight swing only. This isn't a long-term hold, but in the traditional world of non-junk low float stocks, you love it when the insiders are buying. If the CEO Steven Johnson put down $1 million of his own money in the company, well, who knows the company better than the CEO? And if he's buying stock, that tells me that in theory they aren't going bankrupt tomorrow, or what kind of idiot CEO would buy $1 million worth of stock? So,
yeah, and there's the sketchiness of if they're buying it, they're either going to release some good news, which is the ethical side, or they've got some secret plan to pump it, and it's gonna be like a pump and dump. But we'll see less of those these days. I don't know if you played this at all. Did you play this? I was in and out of it.
Not day one, actually day 2, and then day 4 I did. So the second day on the 11th, I took a high a day break on this, and then last Friday
you took high a day. Let's mark that out though. So you say it. So you bought the
okay.
the 30.
Yep. So on the 11th, right here at basically 1350. And then I sold at 1450, and the stock went to 1850. So I took $1 of a $5 move, which is borderline embarrassing to admit, but when you're in it real time, and many of you listening will know, and I'm sure Steven will attest. Hey, I was buying the stock up 300% in 2 days, so it's like you take quick gains. In hindsight, it is a little embarrassing to hover my mouse at 1450, and then you can see
it's coming back down.
So, and then similar on Friday, again, it was like I think I was in at 1550 and out at 16 something. So twice and it proceeded to go to 19 again. But listen, in this type of stock, this type of gain, one of my favorite sayings is you can never, when you're in a low float stock up 500%, I always say you can never be out too early. If you're staring at $1 a share and you're not feeling like a deer in the headlights, you might want to revisit that, because it's like just boom, 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 quick moves on these things. So
no, but I can see where you're going with that. Why you only took the buck, because if it's gone in 10 minutes, it looks like 15 minutes. It went from 11 to 15. So, and you caught $1 of that move because you're obviously betting on shorts, betting higher day than the shorts are going to cover, and you're riding that momentum up for the buck. But like, it's already gone from 11 to 15 in like 10 minutes, 15 minutes. So there's not a high probability that you're going to expect that it's going to keep on going. You think it's going to consolidate for like half an hour or a day, and then it's going to make its next move if it makes.
And then the stuff like this. You never know, because they can halt. FRAN is still holding up today, oddly enough. But these things can drop dollars a share in minutes. So it's like,
don't tell us that you're gonna make a short it. Don't persuade us to short it. Do you know? I'll just tell you. Front side of the move between 8 and 9, I was sick.
So let's set back up. We kind of jumped around a little bit. So we're back here to pre-market of day 1.
Yeah, like I thought, it's a pre-market runner. No, it's a pre-market. It's got the daily's not very good. I'm expecting this will fail day 1 despite it being low float. And I just stupidly, because I was ill and I just wanted to make some money and I was up a lot of money. I was just went full blown. I broke all my rules and went full blown in around 750. And then when it broke 8 and went to like towards 9, I had to cut it. And I took a loss there. I didn't blow up or anything, but I took a stupid loss. So that was like the idiotic way to play the front.
Well, and again, we're going to talk through this trade and you come out a winner in the end. But, one thing I would, Stephen knows what I'm going to say.
How many times?
And most of the listeners probably know what I'm going to say. Day one on these things, I mean, it had earnings. It's a 1 million float. It's very, very dangerous.
Huge volume. And it's not just the volume, it's how rapidly it was increasing. Yep. Like if a stock spikes and then it kind of hovers for 30 seconds, 20 seconds, 40 seconds, and it has that dip where, like, if it has a bit of a big red dip, it's like, whoa, there's no buyers, there's no support underneath this, there's nothing to hold it. But FRAN, there was a queue of people waiting to get in this at any price at that time in the morning. It had so much strength coming up. So like FRAN was tough because you kind of, if you're trading at the open, like you've missed the pre-market move, it fakes everyone out. It looks like at 9:30, 9:31, it fakes everyone out and dumps. It traps some shorts when it comes down there. Everyone thinks it's just another one of those pre-market gainers that fails all day. You see that over and over. The rise on light volume, and then they just fade all afternoon and they give back the gains. But it didn't, and that's a huge sign of strength. And it's your favorite pattern that you didn't take. It's the VWAP hold in the afternoon push.
Yeah. I mean, the only reason I didn't. So fast forward to the end of the day, FRAN held up all day. Held that kind of $9 level. It broke it a few times with that consolidated all day around VWAP and then spiked after hours. Only reason I didn't take it is, I mean, it's just after hours. I mean, it's the pattern. I just wish, if you would have pushed this back. So we're talking about day one here. If you would have pushed that move back to 2 p.m., 2:30, 3 p.m., different scenario. I'm just not a big fan of these things in after hours. And, I'm not much of an after hours trader. I don't recommend it. I don't like it. I'm here, I'm at this desk from 4:30 a.m. to 4 p.m. And most days when that bell rings, I'm gone. I'm out. I like to go outside. I like to go fishing with my son. I like to do yard work. So now, had FRAN done that move at 2 o'clock, totally different scenario. I just didn't like it in after hours is all. So. Yeah,
and I don't know if it was, I think it was FRAN, and it was a couple of days later. Yeah, and we'll talk about it. But like, that's another sign of strength, though, right? Like if FRAN broke, okay, well, let's just go through it and we'll discuss it when we get to it. But the next day, it held up all day, gained after hours, and then it was kind of, for this, we had it looked like it might. Is this the second day where it looked like it? No, this is the second day where it ran. Basically, it got
second, but it was week into the open second day. So again, if you want to look at my screen, I'm kind of hovering over it. But so here's after hours day one, held up all after hours and pre-market, but it was looking pretty sketchy into the open. So.
Yeah, it's still opening green. But there's a bit of hesitation there, and I guess the perfect buy, it's always easy in hindsight, is like don't try and be a hero and buy the spike, because you'll be the first one for it to get that big wick at the open. Big wick, shorts, everyone bails into the spike and it just drops $1. And how many times have you seen it just drop $1, these $10, $11, $12 stocks in the morning?
Oh yeah, that's why I caution everybody. I talk about the 9:45 rule all the time. I'm like, listen, if and FRAN's a good example where you didn't, I don't know if any day last week FRAN spiked, you didn't have to be in early, because it spiked midday and late day several times. So I talk about letting these things prove themselves. You don't have to be a hero at 9:31 a.m. and I highly recommend against it. So
no, yeah, there was a time, like I remember a couple of years ago, there was a time to buy morning spikes. Yep. Like there was a time to buy them,
and it will return. Remember, if you're, the market's cyclical. It's like, nothing is new. It's just we go through these periods. And I remember, I've been doing Stocks to Trade Pro for 3 years now. And I think it was about 2 years ago from memory. I mean, we were very aggressive in pre-market. Last year and a half, I'm always like, wait. It's just kind of a different market. And I think, especially like, say, we get the China trade war resolved, they lower interest rates again, which they probably will. I think things will heat up and maybe that time will come back.
Yeah, but I mean, whether it does or it doesn't, I mean, if it does, then go for it. But by far, as a newer trader, it's by far the safest opportunity always is the higher low or the double bottom. Because with the higher low and the double bottom, you've got absolute reassurance and security that you're getting very good risk reward. You've got a defined limit, and if that limit breaks, I mean, it might come back. You know what I mean? It might just drop for 10 or 20 seconds and rescue itself. But that doesn't happen too often. You've got to take that chance. So you see the higher low on FRAN, and if you're buying that higher low in the tens, then you've got about 40 cents of risk, and you've got $7 of upside.
Exactly. Which you're never gonna sell the top. But what Steven's getting at there is, you're looking for that multiple risk to reward. If you're making trades where you're risking 30 cents to make 30 cents, you're going to struggle to be profitable over time. And sure, odds are you're not going to sell $7 higher, but you might sell $1 higher. That's 3-to-1 risk to reward. Maybe you sell 2-to-1 higher. That's or $2 higher. That's 6-to-1 risk to reward. So,
but I mean, is that afternoon? Would you put that down to just a squeeze? Do you think that's day one's getting squeezed? That's people thinking they're going to short it on day two.
Yeah, I mean, look at this. Look at that. I mean, to me, that candle that I bought, to me, is proof that it's squeezed. Because look at that, and I'm kind of hovering over it, but look at and we're looking at 5-minute candles.
Yeah.
Look at that, the exponential difference between that high-a-day candle and every other candle. I mean, even day one, that's like the biggest candle all 4 days. What's that tell you? That's telling you that every moron is stopping out at high a day. And, that's every moron short, I should say.
Every bad short is stopping out high a day. Every moron is in that second leg.
Yeah, right. Yeah, there you go. Because they survived it. And then they're like, oh, God, it's coming back. And then it rips again. But yeah, I mean, to me, listen, FRAN, it would be curious. I always like to do this. If you're listening to this podcast in 2020, which we're not that far away from, bring up FRAN. It's probably a $3 stock again. I mean, I would be shocked if you're listening to this podcast in, June 2020, if FRAN isn't a $4 stock again. But the point is that doesn't do you any good if you blow up day 1, day 2, day 3, day 4, so.
Nah, and just the other point that I wanted to talk about is on day one, did you see how it holds that support level? Is there any institution in there, do you think? It's like, it's short, not shorts versus longs, it's institutions versus retailers. Like, who's got the buying power to keep this up? Do you know what I mean?
I've joked about this. I think we've joked about this. To the listeners that know my history, I was 90% a short seller for the first 7-8 years of my career. Roughly 2015, 2014, things changed, and I've joked about Bigfoot, aliens, whoever it is, but I think, and I have no way of proving this because it's impossible to prove it unless you're some investigative journalist or something. I think about that time, whether it be small hedge funds or large traders, maybe it's just a big trader. They were like, wait a minute, these low float stock, it's not that hard to buy up a significant majority of the float, buy it up to high a day, you get that big candle, you sell into it, you sell half into that candle, then you buy up again into the afternoon, you bid it up into the high a day again, it rips the high a day again, you sell into that candle. So is it an institution? Is it a big investor? I think it's like some small hedge funds that are like, guys, people short these stocks these days. So in my opinion, I think someone is behind that, and I think they started it roughly 2015, 2016. But
yeah, no, and I just think like, and I always think I'm just watching YUMA on the side there because I'm in it, and it's just. And just the way, like, for example, it when it was like edging 30, 31, 32. Oh, we're on there live.
Yep.
So it was just edging like 31, 32, 30. That was going 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44. And then out of nowhere, a huge seller comes in or a short and wipes it from 45 to 27 out of nowhere. Completely random, uncoordinated. Out of the blue price action, and I just think like that's got to be some sort of small hedge fund building it up, getting shorts scared, shorts are covering, and then they're just smashing it down.
Yep,
it's just got to be.
And I think that's what changed and it's funny because I joked about this on a webinar the other day. Hey, I always want to be clear. Tim Sykes is a business partner. He's a friend. I've considered Tim Sykes a friend for 10 years. But when people ask me about, bigger investors getting into this niche, I always say I blame Sykes, man. I remember back in the olden days, back when I, had to take a horse and carriage to my trading station in 2009, 2010, you didn't see this kind of stuff in these low-priced junk stocks. And I think Sykes just exploded it to the world. And that's why, again, back to my, I'm joking about my Bigfoot theory. I think that's why the bigger money and this manipulation came, because a lot of these hedge funds, or just, again, maybe it's just a guy with or a $10 million trading account, got into this niche and started playing these games. That's what I think. So,
no, and I mean that also explains why the market was so much quieter 10 years ago. Like you'd get great opportunities, but it was dead quiet. But why is it all of a sudden 10 times busier? And it's probably because you've got twice as many players, but also some of the players have got 10 times more money to throw the stocks around. Agreed.
That's what I think changed.
Fascinating.
Back in the day, it was just a bunch of small to medium-sized traders. Now, and again, I have no way to prove this, but now I think there's, air quotes, real money in this niche. And when I say real money, it's like, if you think you got a lot of money with $1 million, remember, there's like Saudi sheiks with like $1 trillion. Okay. When you think there's rich, there's a whole nother level of rich out there. And I think it's similar back in the day with penny stocks. It was all just small and medium accounts. Now I think there's big money there. So
no, and that's why I'm always thinking, like, I always try and think, what are the institutions probably trying to do here? I don't think what are shorts and longs doing here. I think it a bit, but I try and think, what are institutions trying to do here? Are they trying to prop this up? And if they are propping it up, is it because they're going to try and squeeze it tomorrow? But anyway, we'll go back to FRAN. I mean, that's a discussion for another day. But so you obviously had your 2-day run on FRAN, and what was interesting, and I know what is his name? We've had him on the podcast a couple of times. He's doing really well. Guy with Papa John.
Okay.
He's on day 3. It's one of Tim Grattani's favorite patterns. I don't know if it's on his DVD. I don't know if you would do it on an earnings winner, but you see that the overextended gap down. You see how it's made a 2-day move. Normally stocks go up 3 days and they fail on day 4, but this is like up 2 days and it's gapping down on day 3. So it's a really nice predefined risk to say, I'm going to short this up to its previous day high, and if it breaks the high, I'm out. So you've got a predefined risk. But the chances are, if I short a spike, it's probably going to have a small push in the morning, and then it's going to fail. And I know Papa John was shorting the morning spike in the 15, 75,
and you got
60,
that, and then you got that
25.
fail of the up. It did day 3. It perked up into the open, but it failed right at that pre-market high. And then, geez, as a short seller, you love the looks of that candle right there.
Yeah, he's took $2. He's took $2 in 10 minutes. It's just
beautiful.
And I mean, and that's how to trade these things. You're like, if 95% of traders lose, you need to do the opposite of what they're doing. When they're all buying, you're shorting. And when they're all panicking to go, it's dropping, you're covering. And I mean, and that's what Roland told us when I was in Italy with him, and I've lived by it. But yeah, and the trade that I made, which was the solid trade, is I mean, we don't really need to look at it's better to look at it on a daily maybe. If you want to bring it up to a daily, it's more clear. But I was looking at this on day 3. So the initial pattern was the first red day. I can't. You'll have to move it along a bit because I can't see it because of the cameras in the background.
Oh, whoops. Okay, let me.
You can move it along.
Yeah, here we go. There.
Yeah. So on day 3, it was a classic first red day, and you did get that first red day. But I was thinking, considering this has gone from the 4s to nearly the 20s, if it's opened in the 15s and it's closed in the 14s, and although it did drop, it's not really give back much. It's not really like, it's for a red day. It's not been a big red day. It's quite weak. So I bought into the close thinking, I think this could be a consolidation day and it's got more room to go up. Took a slight bit of a gamble, but I thought, you know what it is? This is holding together. It's not dropping like it should.
And just for context, this is Friday, so it's the classic squeeze day.
Was it? No, was it? It was Thursday, wasn't it, or was it Friday?
Oh, are you talking the first red day then?
Yeah, I bought it.
Okay, I was jumping ahead because nope, you're right. That was Thursday. Yep. So sorry, I thought
Yeah, it was double bottoming. It wasn't like pulling back too much, and I just thought, you know what it is? I've seen a lot of these stocks make a big move, have a red day, and then go the next day. I wouldn't recommend anyone else to do that. I still think it was a bit of a risky play to buy it and hold it on its first red day. Could have easily
100% agree. I mean, listen, that's I know I'm Steven and I kind of are, I'm kind of like good cop and he's bad cop when it comes to short selling, especially mainly because I know most of our listeners are new traders. Okay. I love short selling, but when it comes to talking to our audience, I'm usually good cop, he's bad cop. I'm the angel on your shoulder saying don't short these things. He's the devil saying short them, max buying power, double down. So but I will say it was day 3, red day.
Don't buy that.
That's the day for the shorts to come to party, baby.
Nah, it was very risky, but like I say, I just thought, you know what it is? It's only dropped $1. It's not fell apart. I think it's consolidation and room for a leg up. It was very intuition. If I'd lost my account on it, I would have took it. But I didn't. I only bought 200 shares. It wasn't a big gamble.
See, and that's the beauty. That's one thing listen, we don't get a FRAN every day. We don't get a BPTH every day. We don't get these things every day. But if you can be patient and wait around for these, I mean, the beauty of these things is you don't need huge size, man. I mean, listen, if you got a small account, you got 100 shares of FRAN and you make $5 a share, you're pretty happy, No,
but I mean, I can tell you, I bought 200 shares of FRAN and I was up over $1,000 at one point because I was up from 14 to 18 and I was up over $1,000 on it.
Oh, jeez.
Couldn't believe it. I'm just getting out of Yuma now because it's squeezing one side.
I was actually gonna mention that I saw that, so we're here live. People like kind of talking about this, but let me jump back over to Yuma. She's as I mentioned, and I might have jinxed Steven. If you back up the tape, I said, hey, watch out for a VWAP reclaim. And it just touched VWAP, so.
I'm out. I'm not risking it because these type of things, they hold VWAP, then they get through VWAP, and then they start going back to higher day. I'm not risking it on a low float.
And and the simple fact is, and we could probably kind of move on from FRAN. We can talk about this one live too, because it's basically the same setup. Hey, this is what we've got news. If you're not here, or I'm sorry, these are always released.
Look at it reject.
The news is, there's a lot of unrest in the Middle East around oil. The drone strike in Saudi Arabia was just this weekend. The right now there's a lot of finger pointing going around with Iran and stuff. So there's a lot of unrest in the oil price market. And, simple fact is Yuma, so it's got news, even though Yuma itself doesn't have news. It's a sector play. And, I mean, it's a little over 1 million float. It's traded 9 million shares, and it's just retouched VWAP in the afternoon.
There you go. This is why I cover me stock, because this is low float. It's with news. 550 is a crucial level because it's $0.50 as well, and it's at VWAP. And like I know it's just come up a bit and it can easily come down, but the thing with this is if it comes through 550 and it comes through VWAP and it's got news, it can, before you know it, it's at 570, 580.
And Stephen, this is and this goes for the listeners too. In my opinion, and obviously this is just my opinion, I don't care, and Stephen may or may not agree. I don't care if this stock drops to $4 right now. That was a smart exit, in my opinion. Okay, when you've got a stock rotating the float 8 times, 9 times with news into the afternoon on, this isn't day one with this stock, but I mean, it's basically day one because of the Saudi news. I don't care what this stock does this afternoon. I say you had a good cover because you covered for profits, right?
Yeah, no, I took 180 bucks on it. Yeah. I took nearly $1 a share. That's like 22%.
Yeah.
Took like 22% on this. It's a very, very solid, good trade.
And the listeners might be like, whatever, if it goes to 4, how could you possibly say it's a good cover? Because it's freaking 1 p.m. and this thing could do anything today.
But like I always just think like I thought with Fran as well, I was like, is it more likely to go higher or is it more likely to go lower? If it's more likely to go higher, then why would I cover? Why would I sell if I think it's more likely to go higher? And it's the same with Yuma now. I'm looking at it and I'm like, in my experience of seeing these charts, what have I seen happen more times in this situation? And I'm like, does it break? Does it in the afternoon when it's managed to wash all the way out, when it's managed to grind back all afternoon, what does it normally do? Does it normally break the VWAP and try to reclaim high of day? Or does it break down? And more times than not, it breaks.
And you can, this thing kind of, again, kind of an interesting point that in the morning, it spiked to 480 and it was at 480 for almost an hour in pre-market before it exploded to 7. This is in pre-market. It went all the way to 7, but it's kind of interesting just from a chart perspective.
Now look at that. It's going to go
slammed hard, but it held that 480 level again this morning. And then now it's just, this is what I call, this is the torturing short sellers price action right here.
It's going to go it's almost
you can't leave because you're short a low float stock, so you cannot leave the computer. And all it does is go sideways for 6 hours. And if you're smart, you're like, oh God, it's coming. It's coming.
It's going right now. It's going right now. Look at the bid trying to pop up to 558. But the 6,000 on VWAP. But these types of stocks, it's going. Look at it's going to go now. There's 60. There's 69. There's 70. Do you know what I mean? That you might see.
Steven, I know what you mean, my friend. This is this is my favorite setup, baby.
This is what, why do you think I covered? Because I've seen this a million times, and I'm like, it's happening again. I'm not waiting for it to break because when it breaks, it's too late. You've got your levels, respect your levels, respect the 550, respect VWAP, let it break VWAP, let it test it, let it hold. You can't let it hold on these low floats. You've got to get out before because if it breaks, it destroys you.
And I know I've already said this, and listeners might be like, oh, he's repeating himself. But I'm repeating myself to back up Steven's point. Again, I don't care if this thing drops $1 a share right now. Because Steven just said it and said it very well. Him and I have seen it so many times where when they do this, all of a sudden, before you know it, it's $1 a share higher. I mean, literally in minutes. So even if it drops, his cover was genius. I don't care what it does because when they do this, shit gets bad really fast if you're short these things.
Yeah, no, I'm just looking at my cover now. I thought I got out a bit better. I got out 556, but I was out and then it dipped and then it ripped. So I was out 5 minutes before it started getting scary. And that's what you've got to do. You've got to anticipate things that might happen and think, how am I going to react if this happens? You think, with a low float, I don't want to be stuck in that choice. I don't want to be stuck in the decision. Look at that, 73. But I don't want to be in the situation where I have to panic and decide what to do when it rips. So I'd rather just be out before it.
Exactly, because that's great point. Great point. Because, hey, simple fact is, if you're new, you can, when you're in these things, you can rapidly become a deer in the headlights, okay? Because they move fast. So what I love, a great point, Stephen, and if you're listening, write that one down. He got out when he wanted to, okay? You want to get out when you want to, not when you have to get out, okay? Not when you're grabbing that oh shit handle or your broker's on the phone, or whatever. Stephen got out when he wanted to, not when he was forced to. That's a great point.
No, but I mean, and it's the same with FRAN as well. I wanted FRAN to gap up today. Do you remember when I got squeezed on the cancer stock over the weekend? And you're like, why did you ever hold it short over the weekend?
Yeah.
I had the same for other people on FRAN, and I thought, you know what it is? They're going to get squeezed pre-market and it's going to rip. But it didn't.
Well, and I will tell you this, and we can play coulda, woulda, shoulda all day long, but I tell you what, and I had similar, now I didn't hold it over the weekend, but I thought Fran had a high likelihood of spiking this morning. And I think if it wasn't for that Saudi refinery news, because remember, day traders, we're like, we're like dogs that see squirrels. Okay. So, I think had that news not hit, I think Fran would have been a totally different situation this morning, but the oil and gas plays were the squirrel, and all the day traders took off after them and forgot about Fran. So, but I mean, you learn it. I've learned it from Tim Sykes and I've learned it from Tim Grattani. It's just a shame it took 3 years, not 2 years to sink in. But I looked at Fran and I thought, it's not got volume. It's not gapping up. It's gapping down. The play is not working. Yep.
I'll just take me $650. You know what Beautiful. I mean? Like, I'll just take me $650 and I'll look for something else. Found Yuma, took the 200 on that. But the thing is, though, it's not that the profits are good. It's the fact that both times I thought I'll play it safe. Thought Fran, it's not gapped up in the morning. It doesn't look like it's coming through. I'm not going to gamble the open and hope for a morning spike. I'm not going to gamble it. I'll just take me money and leave. Yep. Because it doesn't look like it's going to happen. And
because it's not doing what you wanted it to do. I mean, that's something, again, write this down if you're listening. If a stock, and this, I stole this from Tim Sykes years ago, this is probably on penny stocking part 1, if a stock isn't doing exactly what you thought, just get out. There's going to be another trade. There's going to be another play. There's no reason. So Stephen, his anticipation, he thought there was a high likelihood Fran could gap up this morning. It didn't. He didn't start justifying. He didn't, consult his crystals. He didn't, ask the local street bum what he thought about Fran. He just got out and moved on because it didn't do what he thought it was going to do.
No, and that's the other thing. There'll be another play another day, and
yep.
and it's also like, especially for shorts, especially pre-market shorting, when a stock spikes and it's junk, you're always thinking, I better get in now because it might come down. Just don't bother. Just if it fails and you missed it, you haven't lost any money by missing it. You've lost nothing.
That's something
If it has another leg up and you're in, you are down big time with a bad average. Do you know what I mean?
That's something that I get a little, I like to think I'm pretty patient, but something that I get frustrated a lot is just when people are like, that FOMO, that I gotta get in. What if I miss this one? You know what? If you miss that one, there'll be another one in the afternoon. There'll be another one tomorrow. You don't have, no one trade is going to make your career unless if you're in a buyout or something, if you're in some stock that gets bought out $50 a share higher, okay, maybe that will make your career, but you don't have to be committed to the one today. If it doesn't do what you want, if it doesn't fit your plan, if you don't check all your boxes, you don't have to be in it. because there's this afternoon, there's tomorrow, there's next week, there's 2020, you know.
Yeah, and it drives us crazy, but like it drives us mad. It drives me mad, even though I used to be the person that traded 5 times a day, and like I'll make 1 trade a day, 1 trade every 2 days now. But like, because I'm more experienced, but I used to take 10 trades a day. But people who take 10 trades a day, who are more or less experienced, drive me crazy, because it's like your job as a beginner trader is to not lose money. That's your only job. Don't worry about making money. Just don't lose it. That's your only goal. Finish the day.
Or if anything, I mean, you're probably going to lose too. But the point is, lose small, stay in the game. You know, yeah.
But like, just like your goal though for me is like, just don't try and make loads of money, but just don't try your best to have a break-even day, or don't lose, or lose as little as possible. So then, through that thesis of thinking, if a stock's spiking pre-market, you're not going to try and take it because it's okay to miss it, because your only goal is to break even. And then if it does have another leg up and then it double tops or makes the lower high, then great, take that short then. This is where I'm coming from.
Yep.
But yeah, and who knows, Yuma might run tomorrow as well. You never know.
Yeah, I mean, well, again, you know, I think that one of the biggest things we got to kind of keep an eye on is the news. You know, we'll see. And remember, Yuma is to anybody that's unclear, this is a terrible stock, a terrible company. You know, but the biggest thing is
terrible.
If you look at the 1-year chart, whoops, let me.
Yeah, look at the daily, because this is why everyone's shorting it. Do you see these big wicks?
Exactly, but it also has a history of running. You know, as recently as May, it put in a 3-day run from 2 to 9. So if we keep getting more oil-related news, this could do anything. So,
but so if you were going to sum it up, what would be the top 3 pieces of advice that we've talked about today? I mean, I can start it, and it's anticipate danger and react to it. Is there a better way of saying that? But it's like, don't get yourself in bad situations that you can't get out of. Basically, sometimes
there's only one thing. I know I've dropped a bunch of stolen trading quotes. I got a good memory for quotes. I'm never that good at remembering who said them. But a quote that I always think about is, the one thing you can control is when you get out. Just like when Steven got out on Yuma live, he controlled that. Nobody forced him out. The price action didn't force him out. He didn't get bought in. He made that choice. And that's the one thing you can control, is when you get out.
Yeah, and it gets easier and easier and easier, because the more you see the same thing happening over and over again, the more you can work out the live probabilities in your head and think, 80% of the time this spikes. So you don't care if it doesn't. You don't care if it doesn't spike. You think, well, 80% of the time it does. And I mean, you've got to be an idiot to think 80% of the time I'm going to lose money. Should I stay in it? Like, you've got to be a bit of an idiot not to cut it. But it's harder when you're newer, because when you're new, you don't know what's going to happen. So you just hope that you're not wrong. Do you know what I mean?
Yeah. And that's, you know, when you talk about key takeaways, if you're new, your number one goal is to stay in the game. Keep those losses small so that you're around, so that you can, you know, because so much of this stuff, you know, I can show you, you know, we can print out charts and be like, this did this, this did this, but you got to be in it, and you got to see these things happen over and over again to internalize it. Because it's one thing if we talk about it on the podcast, or we send you charts, Steve and I can email you charts, you got to internalize it to a certain extent. And if you're going too big, or you're overstaying and you blow up your account, and now you got to go back to the day job for 6 months, that's 6 months of learning you missed out on.
Yeah, and the other thing is, like, think about all of the possible scenarios that can happen to be prepared for them. Because with Yuma, when I saw it approaching VWAP, I thought, what are the potential scenarios? It's either going to squeeze and break through and there's nothing I can do. It's going to consolidate and then break through and there's nothing I can do. It's going to consolidate and then I'm going to cover at the end of the day, and then I've lost money anyway. It's going to come back down, make a higher low or a double bottom, and then push back up and then squeeze even harder. Or it's going to crack, but it's not likely it's going to crack if it's testing VWAP right now. So there's like 8 things that can go against us and only 1 thing that can work for us.
Beautiful.
So like, you know what I mean? Like, it's just not going to work out, so you've got to cut it.
See, and I do that with my own trading and in StocksToTrade Pro. Like when people are asking me, what do you think about this stock? I always do the positives and negatives with my hand. And it's like so many times someone will bring up a stock and there's like one positive and there's 5 negatives. And I'm like, I know you're learning, but why would you want to buy this stock when there's, one reason and 5 reasons not to, So, and just like you said, you had 8 reasons to get out and 1 reason to stay in. What would you do? If you're new, again, you'd probably, pray to your crystals and hope that one thing happens. Steven's been there enough. He's been doing this for years. He's like, 8 things can happen, bad, 1 good. I'm gone. My odds aren't good here.
Nah, and it's the same with poker, right? If you ever watch a live poker tournament and they're saying like, the odds pre-flop are 80%, and now it's now that now he's 60%, now he's 40%, now he's 10%, now he's dead, now he's drawn dead. It's the same thing like with trading. Like you can think 80% of the time this is going to happen, but then you have to watch the price action and then reevaluate, and think, no, yep, I'm certain this is going to work. Or no, I'm certain this is not going to work. Or I'm not sure, so I'm just going to get out. So.
Well, I feel like it's a good episode. I feel like we dropped some knowledge here, man.
But it's been cathartic.
Yes, yeah. So I don't. It's always, it's like as the years go on, we agree more. I don't. Am I programming you, or am I just getting softer and agreeing with you? Which is it?
I think I've just lost too much money in the stock.
Fair enough. So,
like most people learn, though, I mean, if you have the challenge, if you have StocksToTrade Pro, for sure it will advance your learning. Otherwise, I'd be losing money and not knowing what the hell is going on. Like, you need to have the pain of losing to improve your discipline and the knowledge of what to do it. And the work in parallel, and eventually the roads join together and you become a good trader.
I joke about that hand on the stove. The analogy I use is the hand on the stove. I mean, it's like, if you're a kid and mom says, don't touch the stove, and I'm not saying everybody burns but at some point, some of us have been like, well, why? And then it's like, whoa. And then you're like, I'm never going to do that again. And trading's a lot like that. You just got to make these mistakes and say, you know what? I will, now that I know what happens, I won't do that again.
Yeah, but it's not even about the money. Like, I'm not trading big enough size for it to even matter about the money. It's more like,
well, yeah, but geez, dude, you've turned a $500 account into $3,000 again, haven't you?
Nah, it's more about $2,000 because I took a loss on the way up.
But still,
still I can make money in the stock market.
There's probably about freaking 5% of people in trading that could replicate that.
Nah, for sure. No, like I'm doing good and I'm learning and I've had good teaching and training and the podcast has helped and you've helped and but like I'm so reckless. Like I'm such a bad, undisciplined, reckless maniac that it took me a bit longer to really have some discipline in my life. And it's with everything. Like it's like I don't think I'm an alcoholic, but like if someone says, do you want to go for a pint? I'm like, yes. Why would I not go for a pint? Like it's fun, but I don't have the discipline to cut stocks, to not do things that are bad for us. And it's took more time for us to learn, but the year-on-year improvement is massive. And
I say, and we'll end with this. If you're out there and you're a few months into this or even a year or two, man, I know you'll go online, you'll see your Instagram ads, you'll see your Facebook ads, and you'll think that you can do this in a month, 2 months, 6 months, a year, 2 years. It can be done. But the odds, they're not good. I mean, this is called the Steady Trade Podcast for a reason. We've been doing this for 2+ years because we know it's a journey, and everybody is going to take a long time to figure this out. It's not easy, and have realistic expectations and know that the longer you stay in the game, the more the likelihood of your success over time. Just stay in. Don't blow up. Don't make the same bad decisions over and over again.
Yeah, don't gamble too much. Like trade small. You can trade for $1 commissions these days. That's the thing. Like you're not losing $6 a trade. You can trade for $1 with IB or Trade Zero, it's really cheap it's super cheap to trade these days. If you can trade with a small account and be disciplined, you really don't lose. But the leave-in point that I would say, and like, you have to have a certain type of personality to like make it in trading, to last long enough to make it. Like, your heart needs to beat a little faster when you know it's coming to 9:30 in the morning. Like, when you've got an overnight position, you need to be waking up in the morning and thinking, I've got that position on, I wonder what's going to happen. Like, you need to be hardwired to love the game. Like, you need to love this game. And if you don't love the game and have the passion to learn it, and you just want to make money quickly, then it's not for you.
Yeah, that's
you've got to love the game.
Yep. I think if your motivation is, I gotta make some money this week, man, you're doomed. You gotta. I talk about, with me. I mean, I've been in this for 13 years now. I was getting up at 5 a.m. with toddlers, little kids that didn't sleep that great when I had a business to study this stuff. I've done 1,600 webinars in StocksToTrade Pro. I've done 120 podcasts with you. Every day I get up fired up about the markets. And if you don't have that passion, I mean, I'm not trying to scare you away, but man, find something. If it's not trading, but find something that you can't wait to do on Monday morning. And if that's, selling beanie babies on eBay, so be it. But that's something I don't think gets talked about a lot. And I'm glad you brought it up. You gotta really want this, because you're going to go through some shit times. It's going to suck. And if you don't really love it, you're just going to quit,
It's depressing. Like, I've spent some days, like afternoons lying in bed for 5 hours, just sad. I've even gone from some walks because I don't know how I can handle my life that I lost $500. $500 is not even a lot of money, but in the early days,
been there, done that, man.
I've been on walks wanting to cry that I can't believe that my life's over. But it's just, you've got it. But you come out of it a stronger man, eh? You come out of it a bigger, better, stronger, more knowledgeable person, and you'll meet a ton of traders as well. You'll meet a massive community of people out there. F1 Team Boss is back in the game. Did you see?
I didn't. So
so he's back on. He's back on, and he's shorting as well. So let's see what happens there. But anyway, I'll let you wrap it.
All right. Well, again, thank you everyone for listening to the Steady Trade Podcast. Welcome back, Stephen. I missed you. I think this was a great episode. We talked about some charts. We talked about a lot of psychology and talked about the journey. So great job today, Stephen. And I hope you guys enjoyed this one, and we'll see you next time.
G'day. This is Keith from Down Under, and I like to ride my Harley through the mountains while listening to Stephen and Tim on the Steady Trade podcast. You can register to win real, actual prizes at their website, SteadyTrade.com. And if you like what you hear, give the podcast a 5-star rating and write a glowing report on iTunes. I did. And this is how we say goodbye in Australia, mate.
Time to kangaroo down,